Okay. Yeah. So today we'll be talking about inducement liquidity and the role it plays in identifying high probability setup on harmonics. Okay. So I'm going to let me draw up the charts example of the setup. Then we'll look at all of them together. Okay. So have this and have the last one, which is this one, something like this. Let me just use a bearish example here. Okay. Osh, can you reduce the volume of your speaker? It's kind of noisy. Yeah. So let's look at all of this. Let's look at all of this. Let's look at all of this. Something like this. This is not picture perfect, but let me just try. Okay. Good. Yeah. So 1 minute, let me just change the lights. Okay, so let's get it started. Yeah. So now, inducement liquidity is a very technical concept and kind of advanced, but I'll try as much as possible to make sure that I break it down for you guys to understand, and especially for those who are going to be watching the recording that are not here live. Um, So now, what is inducement liquidity and which role does it play in our identifying high probability setup? Simply put, inducement liquidity is the last structure before our potential reversal zone. Okay, so it is the last structure before the potential reversal zone. It's just the last structure before the potential reversal zone. So you will see inducement liquidity. Some people call it structural liquidity. Some people call it inducement liquidity, but it is a liquidity that is lying before the potential reversal zone. That is one thing that will make that potential reversal zone a valid uh, point where price can actually reverse from. So without inducement liquidity, for me, I'm not picking up that level as entry. I need to see inducement liquidity within that level before I can consider taking a trade within that level. Okay, that doesn't necessarily mean that you're not going to experience losses or whatsoever. No, what it simply means is that you're picking up high probability setup. So inducement liquidity is a very important concept. Sometimes it's kind of advanced. So I don't want to go into the more technical reason why it works. You can do a basic research on that, but the most important thing is that it's what engineer the bullishness of this move. Okay, price will likely take out this inducement liquidity and then you know react from this level to the upside. Now, the difference between harmonic traders and other traders is that for harmonic trader, you are looking for, first of all, for the pattern to complete. Okay, so why other traders are just trying to, pick entries based on the fact that there is an inducement liquidity very close to their potential reversal zone, or very close to the higher time frame key level. You are only looking at for a valid pattern, because at the end of the day, if the pattern doesn't complete, you are not taking that trade. So while others are looking out for other things, you're only looking out for what? Let the pattern complete first. And once the pattern completes, you now look at if there's an inducement liquidity within that level. If there is no inducement liquidity within that level, then you have to wait for price to engineer or to create inducement liquidity, take it out before moving in the intended direction. So we are going to use chart to explain this concept, okay? But then there are different scenarios of this inducement liquidity. Now, the scenario one is when there is available inducement liquidity before the potential reversal zone. Let's take, for instance, this is a valid BAT pattern. I can take a BAT from this level. Can also consider it to be a shark. Okay. Now we have this here as a valid pattern. Then in this level, you have your higher time frame key level. Okay. You have your higher time frame key level. You have your higher time frame key level. Okay. So you have your higher time frame key level like that of the you have your order block and all the rest of them lying within this level here. Okay. So you have your higher time frame key level, you have your order block and all the rest of them. Okay. Now, what happened is that price will take out this inducement liquidity. In fact, this inducement liquidity is what validates this level. If you see inducement liquidity before that potential reversal zone, there's likelihood that that level will cause price to reverse to the other side. Okay. So what price will do, that price will take out this inducement liquidity and then complete the pattern. Of course, you can know that for this pattern now, you're waiting for the 0.886 to do or to complete. Okay. So if I add BAT here, all the measurements I've already saved, you can see. So you're waiting for the pattern to complete. Once the pattern completes, price are taking out this inducement liquidity, then you look out for your confirmation, which are different ways you confirm your entry. Probably you wait for order block, you wait for new order block to be created. You pick your entry from the fair value gap or from the order block that's created around this level, and then off you go. So that's the first concept of inducement liquidity. Another concept of inducement liquidity is when your potential reversal zone is very clean. You can see this level is very, very clean. Let me just bring text. Is when your make it text black. Good. Is when your potential reversal zone is very clean, very, very clean. There is no structure here. There is no inducement liquidity before the potential reversal zone. What could likely happen is that there are two options. Price could sweep through this low. So what happens is sometimes price will likely sweep through this low. Let me bring in so what happened? The price might likely sweep through this low before reversing to the upside. So this is what you might actually find happening around this level, okay? Or what price could actually do is that if it's a pattern that could complete, let's say for instance, now this is another, let's say this is a shark pattern of this form, okay? So what could happen is that price will, I'm going to show you instances of this trade. Price could just, do something like this. This is another pattern you have here. Okay. So what price will do is price will engineer liquidity closer to that your potential reversal zone. You will see that price will come very, very close to your potential reversal zone and reverse to the upside. And then what you notice is that price could start to range. And all of a sudden, it will take out this high. Sometimes it will take out the high of this place and then push all the way down, complete the pattern. Once it completes that pattern, and then it takes out this inducement liquidity and then continue to go to the upside. So these are different concepts of inducement liquidity. Okay. Now for the bearish scenario, the same thing. This one is the one that is very common sometimes. You're going to see price doing something like this, okay? It will react from your potential reversal zone. For instance, let's assume that this one is a crab, okay? Let's assume that this is a crab. So what price will do sometimes is that price will react from your potential reversal zone. It will react from here. Price will react from the potential reversal zone. And then all of a sudden, you will see that there is an order block here. At this potential reversal zone, there's an order block here, okay? So what price will do is that price will trade into this order block and then start to range, creating what? A liquidity around this level. So now, the essence of this liquidity is that, let me just explain a little bit of our concept here. Now, these guys, the hedge fund, the investment banks, they are looking to short the markets. Okay, now they don't have enough buyers in this market to, to sell to, right? So now all they have to do is to hedge their position. So they will create a fake, not really a fake, it's a reorder. So they will buy and sell within this level just to lure. The concept inducement is to induce something, is to lure people or to lure retail traders to take an action. Okay, so what they do is that they will take buy and sell within this level just to lure retail traders that are, people that, of course, if you are selling from here, your stop loss is going to be above here. And if you're buying from here, your stop loss is going to be what? Below this level. Okay, your stop loss is below this level. So whenever they are ready to move price, what you likely notice is that they will take out the sellers, take out the stop loss of the sellers, take out the stop loss of the buyers, and then tap into this higher time frame key level, then push price to the downside. So these are different concepts of inducement liquidity, and it is already in all the trade we take. So now what will happen is that after this live presentation, you can go back to the chart. All those trades you picked out, you'll find out that there is always an inducement liquidity within that level. Sometimes it's not always, like I said before, it is not always, but most times this is what I look out for. If I don't see any inducement closer to that potential reversal zone, I'll wait for price to engineer liquidity within that level before I can look out for entry. And it always happens sometimes. Okay, sometimes you also see inducement liquidity. Probably, for instance, you will see something like, let me just draw something like, you will see a higher time frame key level, something like this. Okay, price have traded into this level, and all of a sudden, and then you have something like this. So what you will see, that price will take out this inducement liquidity, tap into this higher time frame key level, probably an order block or a weeks or weekly fair value gap or weekly resistance level, and then you will see price moving aggressively to the downside. So these are different concepts of inducement liquidity that you always see in the market, and it is very, very important concept. So let's go to the chart and then look at some chart example. So after that, if you have question, then you can now ask. So let's look at some chart example right here. Okay, so let's look at this level. Even though I'm not really seeing anything here, but I'm seeing something that looks like a harmonic setup. But then let's look at this. Okay, even though this is way above, so there is nothing here. So let's look at different concept. Let's look at okay, let's see this. Okay, I can't see anything here. Okay, I can't see anything here. Let's look at the daily time frame. Okay, sometimes you're going to see inducement liquidity playing out very close. Okay, for instance, now let's look at this level here. Okay, now I'm seeing something that looks like a crab. Let me just measure that. So we're going to look at different concept. Okay, so this is a crab pattern now. Okay, and then when you have this crab pattern, what is the next thing you should do? You mark out that high and see if there is a key level there. You can see that there is an order block here. Let me zoom in. You can see there's an order block here, which is on daily time frame. So this is a key level right here now. It's a higher time frame what order block. Okay, so you mark it out. Now before that order block, this is a structure. So this is a structure very close to this potential reversal zone. So this now becomes your inducement what liquidity. So that is what, sorry, that's what validates this potential reversal zone. So this is what will give you confidence to even place pending order here. All right. So this will give you confidence to do what? To place a pending order here, right? So this is what will give you confidence to do what? To place a pending order. You can see what price did. Even before that, price also did another this thing and then came back and then off you go. So if you're picking this type of entry, let's say for instance now, this is this could be, don't really know if this is a deep crab. Let me check. Okay. Let me check. Okay, this is a deep crab. So if you look at the tolerance level of a deep crab, you can consider that to be a deep crab. So we have from this level to this level to this level to this level down to this what to this level. So you can see how this concept is very, very, very sharp. Okay, you can see how this concept is very sharp. So these are different concept of inducement liquidity. Inducement liquidity. It works like magic. It works like magic. For instance, you can see that there is an inducement liquidity here. Let me see if this one was, let's see what happened here. Good. You can see what happened here, right? Price took out this inducement liquidity, and then what the price did, 1, 2, 3. You can see that this is now an order block, but there is a fair value gap between this inducement liquidity and this place. So this is a gap. Okay. So from here is a gap. From here is another gap. So between this place is a gap that price has not filled. So now what price did was to take out this inducement liquidity and then fill this imbalance. Okay, though I don't know if there is an order block, if there is a harmonic pattern into this level, but then you can see what happened. Sorry, you can see what happened here. The price actually reacted from this level, but then like I said, I don't know if there is no, for instance, I think you have a harmonic pattern probably into this level. Now this now becomes a valid setup for you. So that is that. Now let's look at what is happening here on Euro and Euro USD, for instance. Now you can see that right here now, we have this key level here. This is an order block. Okay. This is an order block. Okay. This is an order block. Then before that order block, there is a fair value gap here also. And then there is what? What do you see here? Inducement what? Liquidity, right? So let's see what price is reacting right now from. Let's see what price is reacting from. Let's see what price is reacting from. Okay, good. Price has not gotten to this level, right? So this is where price is right now. This is where price is right now. Okay. So what are you seeing here now that is going on here? It's very clear. Very, very clear. You can see that this is an inducement liquidity. This is an inducement liquidity. And before that inducement liquidity, we'll have this words key level here. So what price will likely do is that sometimes if you're using a pending order, make sure that your pending order is very, 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 very close to the inducement liquidity, because sometimes price will take out that inducement liquidity and then start to move in the other direction. Remember, it's always, we have to wait for your pattern to do what? To complete. Now, do you have a harmonic pattern into this level? You can see what happened there. So let's look at if we have something here. Initially, I was having something like, is he a crab or whatever? Let me check. I was having a pattern here, but I don't really know which of the pattern that's one is. Should be a, let me check. Shark. Not sure. Let me check. Deep crab. No, it's not deep crab. Check shark. Okay. 113. No, it's not shark. It should be a crab. Yeah, it should be a crab. 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 Yeah, it's a crab. So we'll have this crab pattern here. So we'll have this crab pattern here. Okay. It's a crab pattern here. Very, very far. This is where the pattern completed. Now, because of the concept of inducement liquidity, you will know that price will need liquidity to move to the other direction if you want to move to, right? So now, all you have to now do is to look at this level. Do you have a higher time frame key level? Do you have, you can see that this inducement liquidity is very, very far from your potential reversal zone. So now you can see that this is the next inducement liquidity that is here, and you can see that this is a key level. So this one likely price might not even react from it or can just sweep through. You can see what happened. You can see it has even reacted from it in the past. It has reacted from it in the past, and it has reacted in the past and all of that. So the next available one is the next unmitigated one is this one that price is reacting from right now. You can see what is happening now on Euro NZ is pushing to the other side. So I hope this concept is making sense now. Okay, so you can check other pairs. I think there is another example I want to show you on. Let me see this. Where this is one CHF. Yes, I think. Let me show you this example right now. Good. This was a trade that happened before this fall. Let's look at what happened here and see the essence of inducement liquidity now. Okay, so let's look at what happened here. Now, this is a key level. This is what's a key level, right? Good. Now let's go to the 4-hour time frame. Now for 4-hour time frame, I think I traded this pattern, but I closed before the move. I closed on time. I would have even made a lot of profits. Can imagine. So I closed on time. So this, let's see, it was a butterfly pattern into that level. Let's look at that. It was a butterfly pattern into that level. It was a butterfly pattern. Yeah, butterfly 0.786. It was a butterfly pattern into that level, 0.786 and 1.272. So we had this setup from here, to this level, to this low, which is 0.886 and into this level. So this was the setup, okay? This was the setup, right? Good. This was the setup. Okay, so we have this key level. Now you can see how clean this key level is. You can see how clean this key level is. Yes, this structural liquidity is very, very far. You can see that there's a distance between here and this place. It's very far from the potential reversal zone, but it's very, very important. Yes, this is another confirmation. All right. So all we have to do is to wait and see what price will do when it gets to the potential reversal zone. Okay. So now, when price got here, see what price did. This pattern was completed, but see what price did. You see that concept? Price started doing what? Now, remember that this is the order block. Let me remove this one now. Now, this is the order block, right? I was waiting. I was really waiting for price to tap into this order block. I was waiting. This thing took about 1 week or even 2 weeks. Let me check. It took about 19 days, 21 days, almost 1 month, guy. It took almost 1 month. I was waiting, guy. But see what price did. Price created this liquidity up. Okay. And then created this liquidity below. Okay. Very simple concept. Very, very simple. That was the only thing that made this potential reversal zone valid and solid. That was the only thing that made this level valid and solid. If not, that level is nothing. Price will just sweep through it. And you can see how price came, tap into that level, and it was a massive, massive drop. It was a massive, massive, crazy drop. It was a very massive, it was a very, very, very massive, crazy drop. So that is a concept that you should be exploring when you are on the chart. Okay. So let's look at what do you call it now? Let me see. Okay, okay. So I don't know if you have any question because we're almost done with this section. So let's look at some currency pairs now. Let me see if I have. Let's look at some cryptocurrency pairs now. See most of those stuff in action. Okay. So let's start from this one. Let's start from this one. So let's look at some example. 1 minute, let me change the lights. They are just taking light and bringing it back. Change the lights, coming. Change the lights. Change the lights. So it's a very important concept. It will help you to, to be able to pick entries that really, really make a lot of sense. And it's a very, very important concept, okay? A very, very important concept and something that works very, very magical. Change the lights. Okay. A very important concept. Very, very important concept. Very, very important concept. It's a very important concept. So now let's look at what is happening. This is a cryptocurrency pair. It's a coin. You can see how price is pushing up right now. So let's analyze what is happening here on this level. Now, if you look very well from the daily time frame, you can see that this is all-time low of this asset. Okay, this is all-time low. So there is no available record on the left. Okay, there is no available record on the left. So, but let's see what happened here. Okay, let's see what happened here. Let's see what happened here. Okay, now see what happened here. You can see what the price did. Price took out the inducement liquidity and then tap into this key level. You can see what is happening here. So it's a very, very, very simple. It's not simple, but it's a very important concept and it works like magic. It works like magic. So whenever you're picking up your entry, look for inducement liquidity closer to that other block, that fair value gap. If there is no inducement liquidity, if there is no IDM, if there is no liquidity there, then you have to wait for confirmation. You just have to wait for confirmation. That is another thing you have to look for. You have to wait for what? Confirmation. All right. So let's look at other example. Let's look at. So if you have any question, at all, bro, just let me know. Just ask. If you have any question at all, just let me know. I just hope my screen is still sharing. Yeah, I can hear you, please. It is the last structure. It is the last structure before your potential reversal zone. The last structure before your potential reversal zone. I use this horizontal ray. I use horizontal ray to mark it out, and then I use is the last structure before your potential reversal zone. Let's say you have this. Yes, the last swing low or the last swing high before your potential reversal zone. So this is your potential reversal zone. Now you have this is not the last one. Then you have something like this. So now this one before this potential reversal zone, this particular one now, this one here now, not this one, not this one. This one before your potential reversal zone is the what? Inducement liquidity. That is that one. So if you're also, let's say for instance, you are trying to sell the same thing, the last one before your potential reversal, it is always going to be very, very close. It is always going to be very close, very, very close to your potential reversal zone. It is always going to be very close. So you're definitely going to see it. So don't worry, with examples, you understand the whole concept very well. So in this instance, now I don't know if there was any inducement liquidity, because this asset is also, most of these crypto assets, they are actually on their lowest low. But let's look at what happened here in the past. Let's look at what happened. Let me just hide this one for a second right now. I even sent out this signal to you guys on the group. I don't know if there's anyone that took the signal. I'm not sure. Probably none of you guys took the signal. Your $10 would have amounted to $100 by now, because crypto pairs are moving crazy right now. I sent out the signal to you guys, but I'm not sure if anyone took that signal. Now, let's look at what is happening here right now. Can you figure out any harmonic pattern here? Okay, can you figure out any harmonic pattern here? I can see one. I can see this one. Good, right? So this is looking like what? A shack of what? Shack of this is looking like a shack of 1.1, shack of 1.13, right? Good. Let's measure that and see. Let's measure that and see. Let's measure that and see. Beautiful. Beautiful. Shack of what? 1.13. Now, what is on the left? You look, this is a key level. It's a week. If you go down to the lower time frame, this week will be an order block. So since it's a rejection week, it is a key level. Before that rejection week, what do we have there? What do we have there? We have what? This structure. So this is now your inducement what? Liquidity. You can confidently place trade slightly above the inducement liquidity, because some sellers, what they will do is that they will pick entry here, they will enter here, they will put their stop loss above here. Price will come, take out their stop loss, tap into this key level, and then go, because they need liquidity to move price. That is just it. So that is just the explanation of the concept. All right. So you can see how this was a very smooth ride. That was also this bearish bear run on crypto. So we are almost done with the bear run. We are now starting the bull cycle. So bull cycle is about to start. So the bear cycle is almost done. You can see this started on November 2024. That was when this setup came, and I was not even trading crypto by then. I started trading crypto this year. I just started trading crypto this year. I wasn't trading crypto by then. Crypto trading is very, very sharp. It's very, very sharp, because for crypto trading, you can actually set your stop loss and determine how much you want to risk on that trade, and you risk that amount. Unlike forex trading, where you determine your stop loss, and the capital you have is not even enough to hold trade and draw down. But it's not like crypto. For even though you have $5, even though you have $10, and you have set your stop loss, that quantity you have selected as a stop loss, that is where if price get to that level, that is the amount you are going to lose on that trade. So it's a very important, it's a very wonderful stuff. So there are some people don't know much about it, so that's why they don't even trade it. It's very nice. So you can see what is happening here right now on this trade. I don't really know if there was an inducement liquidity, but probably there was. Of course, you can see how price took out this low as an inducement. Okay, it took out this low. People we are buying from here. So early buyers, we are liquidated. Early buyers, we are liquidated. This is like let me just, so you can, if you can unmute, if you have any question, like I said, I just hope you understand what I'm talking about, right? So price will take out these early buyers, take out their stop loss, because that is liquidity, that is money for them before they can move price. So let's look at some couple of other examples. Let's look at Ethereum as well. Let's look at Ethereum right now. Let's look at Ethereum as well. Let's look at Ethereum as well. Okay. Let's look at Ethereum as well. Beautiful. You can see what is happening on Ethereum right now, right? You can see how price is moving. Okay. So now let's look at this low. Let's look at this. Let's look at what happened here. Let's go to the left and look at what happened here on the left. Let's go to the left. Let's go to the left and see what happened there on the left. Let's go. Now you can see what happened here. I don't know if you can see this clearly because of this, but see what happened. This was a rejection into this level. Okay. Now, if you look at the left, you see that there is an order block here. This is an order block. Right? So what price will do, price did was, price took out this liquidity. It was money that was lying down here. Price took out this liquidity, and then that was what validated this order block here. If this place was super clean, you have to wait for confirmation before taking that trade. So what happened? Price tap into this, price took out inducement liquidity and then tap into this higher time frame order block, and then you can see what is happening here right now. It's pushing up. Is the concept making sense to you now? Yeah, I can hear you.
Say inducement liquidity order block. Is it the same thing with order block?
No, it's not.
I can see.
It's not order block, because it's not order block per se, because if you look at it as order block, you get confused. Just look at it as swing low and swing high. It doesn't necessarily matter if there's an order block there, because now if there's an order block there, you'll be tempted to take your trade from that place and price will liquidate you before tapping into the main order block you're supposed to trade from. So even though price will create an order block there just to tempt early buyers or sellers, don't do that, because you know that, first of all, that is not even where your pattern completed, which is the number one thing. Secondly, yes, it's an order block, but there is an order block below it, which is the main order block that price is going to react from. So that particular one, even though it has order block, it is the inducement with liquidity. Okay, 1 minute, I'm coming. 1 minute. So I hope the concept is clear now, right? I hope the concept is very clear now, right? I hope the concept is very clear now. So if you have any question, just go back to the chat. All those your trade you took, all those trade you took, you can see even here as well. You see inducement liquidity here, price tap into it, and then you can see even here too, when price came back for the first time, I think there was a pattern here as well. You can see this was an inducement liquidity also. Let me even remove this. I don't need this. Look at this inducement liquidity here, right? This rejection is an order block on the lower time frame. So see what price did here. It tapped into that inducement liquidity, mitigated this week here. This week is a rejection. This comes with experience anyway. I'm not expecting you to start getting it right out of the bath. But if you go back to the chart and begin to look at all of this, you start to make a lot of sense to you, right? So I'm not expecting you to just get it once and for all out of the bath, but just go back to the chart, you begin to understand. Now let's look at Bitcoin. Let's look at Bitcoin right now. Let's look at Bitcoin. Let me show you the concept on Bitcoin. Now, on that was last month during our market review last month, I talked about this Bitcoin of deep crap. And I told you guys that we are waiting for the pattern to complete and all of that and all of that. See what happened on Bitcoin. Let me just hide this for a second. Now, see what happened on Bitcoin. Look at what happened on Bitcoin. See, everybody was expecting Bitcoin to push all the way down. They were expecting Bitcoin to push all the way down. A lot of people were just waiting for Bitcoin to tap into this inducement liquidity and then tap into this other block, right? But what did Bitcoin did? See what happened on Bitcoin. Bitcoin engineered liquidity closer to this key level. Remember, this was a previous level of resistance that was broken. Price is coming to retest as what? Support. Is that very clear? That is very clear. Now, if I extend that right now, see what happened on Bitcoin. Bitcoin engineered liquidity closer to this what? Key level. It came right there and then gave them a fake indication that it's trying to push all the way up. Then what happened? Bitcoin came back, took out that low, and then completed the pattern. And then completed what? The pattern. So that's why if you go down to the 4-hour time frame, you can see that that was a clear inducement. It was what? A clear liquidity that price grabbed before pushing all the way up. So this is one concept of liquidity that price always use to move price to move in any direction you want to go. It's a very important concept that price always use to move price to move in a direction you really want to go. So this will bring us to the end of this section. So I don't know if you have any question for me again, so that I can be able to round off right now. I don't know if you have any question. And I was even supposed to be on this trade, but I closed. So one aspect of trading is risk management as well, and patience also. It's risk management and patience. So I was supposed to be on this trade, but I closed out because I was trading other pairs on that account. So I couldn't hold this particular trade, so I closed out. So, and that is just it, right? So that is just it. So that is just how this whole stuff plays out. And it is a very, very wonderful concept. So do you have any other question, bro? Because I'm already rounding off the live. Do you have any other question?
Maybe I want the live video. I have time.
Yeah, please do.
Now I don't.
Yeah, please do. Look at this one also. This is the last example now. Look at this one also. Now, can you show me the inducement liquidity? You can see that this is the inducement liquidity now. It is an order block. You can see that this is an order block. You can see that this is an order block, right? An order block is very simple. 3 candles. The first candle is the order block. The middle candle is the fair value gap. It's just that simple. I like to keep things simple. I like to keep my stuff. I don't like complicating things. The first candle is the order block. This one is the fair value gap. And this is the one that started the move, right? So now you can see that this is the inducement liquidity. Why? Because there is a key level. There is a key level. There is a key level below it. So price will likely take out this order block and then react from this one. So you taking your entry from here, you must have gotten stopped out. Probably your stop loss would have been getting hit, but price will take out this inducement and then we take out this structure and then react from this what order block. It's all about looking out for where your pattern complete. That is the most important thing. Where your pattern complete. That is the first thing you need to look out for. This is where the pattern complete, not here. All right. Okay, fine. This is where the pattern complete. But then where is the liquidity? There's no liquidity. Is very clean. This place is clean. There's no liquidity here. So this is where the liquidity is, and price grabbed it and decided to push all the way. So the concept is very, very simple. Like I said before, you have your structure here, you have your pattern, and then price will come back here. So do something like this, and then push all the way up, taking out this place as inducement, or price will come to this level. That is this thing here. Take out this inducement liquidity and then push all the way up. Or price will likely do is to come here, okay, do something like this, take out this one and then push all the way. It's all about liquidity. That is the most important thing. It's all about what? Liquidity. It's all about liquidity, guys. So this will bring us to the end of the video. So if you have any question, can reach. Please, if you have any question, just call my attention or schedule another meeting with me so I can be able to explain the concept to you very, very well. But I'll be sending out past trade examples showing this inducement in place so that as you keep seeing it, you begin to understand how it works. So it will help you to understand it very well. So this will bring us to the end of this section. So thank you for joining me. I really appreciate it and have a wonderful day, and then bye for now.